Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, December 8th, 2021. What I'm going to do is start out with a relatively brief update on the equity markets, just point out some things to watch for on both the weekly and weekly time frame as well as the 60-minute charts. Then I'm going to roll into do an update on gold and silver and the precious metals. Might include palladium and platinum in there real quick, and the U.S. dollar, because that's what we want to watch, the dollar and the euro, determine where gold go, or have a big impact, I should say. Update on crude oil, sugar, Treasury Bonds, TLT, and LQD, the corporate bond ETF, investment grade corporate bond ETF. The sugar trade is going to be, sugar is actually a new trade idea. The rest are updates to existing trade ideas that I've highlighted recently. Okay, diving in here. I'm starting out with a weekly chart. Remember, there are different time frames, so I can speak to one time frame and I'm bullish or bearish at any given time on a certain security, but then maybe, let's say, short-term bullish looking for a near-term rally, but then longer-term bearish, or vice versa. In other words, one has really nothing to do with the other, but what happens on the shorter-term time frames ultimately do impact what happens on the longer term time frame. So if that sounds kind of like a riddle, basically what I'm getting at here is today is Wednesday and the trading has just opened. It's 10:13 a.m. We've been trading about almost 45 minutes, and all that's going to matter on this weekly time frame is how we close the week. So what I want to point out is this is the SPY S&P 500 weekly chart. Recently I highlighted these bearish engulfing candles that we had right here couple weeks ago, and that was followed up in both QQQ and SPY with an additional red candle, which gave us a check mark to confirm this bearish engulfing candle. Again, that engulfed those previous two candles, right? Actually, three weeks of candles were engulfed by that bearish engulfing, and that is a potential topping stick. And I always like to see confirmation. To me, it's only a potential topping stick. That sell signal becomes confirmed once you get follow through to the downside. At least one and ideally two follow through red candles, and as I like to say, the redder the better. So we got that one the following week. Now here's where we're at. We're at this green one right here. We're still below the top of the bearish engulfing from a couple weeks ago, but we're getting to the really the upper threshold. I don't like to see a green candle really violate much above the upper 2/3 of the bearish engulfing candle. And now again, this is an intra-week candle. Today is Wednesday early, so a lot can and probably will happen before 4 p.m. on Friday. So here's what I wanted to point out. So right now, it just kind of still gives, makes it still a little bit of a questionable sell signal. I'm referring to that bearish engulfing because ideally you want to see this week close down around or at least somewhere below the top of last week's candle. Again, that's ideally. There are no absolute, it must do this, it must do that. The only thing it cannot do is take out the top of that candle. Otherwise, that couldn't possibly be a topping candlestick. How can it be a topping candlestick if it wasn't the top? All right, so here's what I wanted to point out. All right, the last couple big corrections we had, nothing goes down forever. You had a sell signal back here when COVID first hit. You had a nice clean trend line break. I went over that trade recently. We were short there. We caught the initial drop. We covered the short, gamed it for a long on the bounce, and then went short again and covered not too far off the lows on this. But what happened is when the market first dropped, let me turn off these trend lines and everything else. You went down. You had a red candle. The following week, another red candle. Although that wasn't a bearish engulfing, you had a snapback rally here. Pretty strong one. That was, gosh, I covered it the other day. It was at least 10, maybe 12%. And then, boom, the next leg down. And what I want to really highlight, too, is this fourth quarter drop, 2018. We caught a lot of that on the short side, too. We had sell signals there. That was a big drop. It doesn't pale to the, compared to this 36% drop when COVID hit, but it was a biggest correction in many years. The S&P 500 from top to bottom fell over 20% there. So technically its own little bear market if you count the high and then the low. Okay, so what happened? Well, a couple things. Let me zoom in real tight there. Okay, turn off all of those lines, squish down the PPO MACD, and here we go. Okay, so this was it right there. We had this bearish engulfing right here, engulfed that previous candle right there, and then you had a big red, you had a confirming stick, and then a nice rally again. And I'm going to show you this up close. That was from top to bottom. Oh no, well, this was our first big rally right here, first counter trend rally, and for top to bottom it was better than 8% right there. So you had some follow through. That week was green, but you remained below it. But again, the point is nothing goes straight down forever, and I want to show you how this one looked when we zoom in. This was that top back in, again, fourth quarter 2018. You had negative divergence. We had some sell signals. And so that first leg down, and this is looking at it on the daily chart, we dropped and then had a snapback rally, and I measured it right here. I don't know if you can make it out in the video. It's 6.2%. Right there. We had a 6.2% snapback rally, and I also put up Fibonacci retracements for you. And that 6.2% bounce just exceeded, it was a little bit above the 50% retracement level. These are Fibonacci numbers, so we were somewhere between the 50 and the 61.8. We had another counter trend rally there. That one was bigger, but it still took us back from the initial, from that drop off the highs. It took us a little bit above the 50% Fibonacci retracement level, which was right here, and almost to the 61.8, yeah, about halfway in between, so forth and so on. Now, the entire move down from high to low was a 23.4% drop, roughly. It's measured right here. And so again, I wanted to point out what a counter trend rally looks like and feels like. Even this first one right there doesn't look like much, but it was a 6.2% bounce, right? And it took us back a little bit above the 50% Fibonacci retracement level. And of course that's on QQQ, if I didn't make clear. And so now, as of today, where are we at? Well, let's go to a 60-minute chart. We've bounced from the initial high. We fell so far from here to the recent low about 5.2% right there. That was our bounce so far. So well within and even below that first tradable, let's say, counter trend bounce back then. And also we're right at about right now the 61.8% Fibonacci retracements there. We're right on it. We zoom in, we're trading exactly on that level right now, about 397.50 or so. So that's it. And now anything is possible. I'm going to talk about that real quick. Anything's possible. I mean, you know, the market could plunge 20% in the next week if some black swan event hit, something crazy happened. But what possibilities, that does no good in trading. I could sit there to deny that anything is possible. You can't. Because it is. Any move up to the new highs, we could double top here. We can blast on the new highs and go up 30-40% before the next correction. That's possible. But in trading, all I care about and all we can focus on are probabilities, what's probable. And so, you know, right now, the probability is still decent that we get another leg down. I'm just showing you that this is just a run-of-the-mill bounce so far. The one thing I'm going to say now, and I'm not going to get into these charts because this video will go too long. There's other things I want to cover. I'm not crazy about the fangs. They started to roll over. They were coming under some pressure last week, but a lot of them hit support, and a few even put in divergent lows. I need to see more weakness in the tech sector and the market-leading FANG stocks to really firm up the case that we're going to go on and hit my additional targets. I'm just jumped over to a different board here. Remember, we hit my first two targets on the near-term 60-minute chart, and I have additional targets there, and then even longer-term potential targets on the daily chart. But those probabilities, the probability of that happening will start to decrease if we go much higher. We're on the 61.8 fib now, as I showed you a minute ago. We go up much more. When you take out 401, you've taken out a pretty good resistance level, and there's really not much resistance from that point to all-time highs. And so that's it. So the point is, it's Wednesday right now. Let's see how the week finishes. Right now, I wouldn't be, if I didn't have a position, any positions at all, if I just came into this blank right now, you haven't traded, you just, came off vacation, I wouldn't do anything right now. I wouldn't go long, and nor would I add to shorts, because we're kind of pushing the limits of where I think this bounce should go to ideally keep the bearish scenario intact. So I had mentioned a couple objective short re-entries before, but we've jumped past those. And one of them was right here, but we gapped past that. Then you had the downtrend line, but that downtrend line is not valid now. Why? Well, I put it there as a potential downtrend line. Had we gotten a reaction yesterday, that would have been 1, 2, 3. In my book, it takes at least 3 distinct reactions to validate a trend line, because any 2 points can be connected at random. So what I'm doing now is, boom, that trend line's gone. So all we have right now is that 401-ish level, and then the Fibonacci resistance right there around 61.8 retracement level. And then jumping back to the weekly chart of QQQ, let me pull that in nice and tight. Let's go back again to that fourth quarter of 2018 drop, just to use that because that was one of the bigger drops. That's why I'm focusing on that one. And it had similar technicals. There was our bearish engulfing candle right there. And then we went down, and that was that first, which one was it there? Was that the first tradable bounce, or was that the next one right there? That was the, yeah, that was, that's 9.6. We had a bounce right here. Oh yeah, there it is in week 2. That was the first one I showed you right there. That was, doesn't look like a lot here, but it was right about what we've done. That's a 6.2% bounce. That was the one I zeroed in on. The first, what you would call tradable, or let's say you were short and you watched your short position give back 6.3%. I just showed you before on that other chart. You know, the buying pressure was pretty strong. Everything was going up, up, up for a week. And then boom, the next one came down. So I'm just trying to highlight that we're still in the realm of probabilities that this may happen, but the probabilities or odds start to go down as we go up from here. Again, that's 2018, and here's where we're at right now. So zoom back into our 60-minute chart, and that's it. So there's the other Fibonacci's in the 5.2% drop. So on the weekly on both SPY and especially QQQ, this is what I'll be looking for. This candle right here, if we don't drop into the end of the week and close down somewhere along here, especially if we keep going higher, again, it just sharply decreases probability. And at that point, you might want to, if you're short, consider where to scale out. I like to scale out. It depends how much you have. If you're got a pretty good chunk in short positions, then you might want to scale out, or you could do a hard stop. That's up to you, completely up to you. But and I told you at best, I think we get a marginal new high. The thing about it, and it's fine if you're a patient trader and you want to ride out any counter trend rally or a rally up to new highs. Again, there'll still be divergences, at least for any time soon. There's no guarantee those divergences won't get burned through, but pump up to marginal new highs would look like this on QQQ. You'd come up here somewhere, you know, few percentage points, maybe 1, 2, 3, 4 percentage points above, maybe 5 or even 6, and then with the PPO going like this, just like it did here, and putting in a lower low. And that's what I'm saying, at any marginal new high anytime soon. There's a time function or variable in there. Anytime soon in the coming weeks or so, maybe a couple months, is guaranteed to be a divergent high. These indicators are lagging too much to come in if we went up in the next week or so and took out that high. They're lagging too much to take out the previous highs. And that's why again, I don't see the risk reward. The upside is minimal, and with these divergences, we already had divergence at the recent high. So that divergent top could be a more significant top and then take us down to those longer term targets. So all right, let's move on now. Let me give you some other trade updates and trade ideas. Let's talk about the dollar. I'll go in the order I mentioned at the beginning of the video. US dollar futures. The US dollar index futures, that is. It's DX is a symbol, delta X-ray, and I'm going to show you, well, you can see here, simple stuff. This was a divergent high, a rising wedge pattern with a clean uptrend line. We broke it there, got a sell signal, and had a correction. Falling dollar is bullish for gold. Then we set up, watch, rinse, repeat. That was a divergent low, as you can see, and we rallied. We rallied until we started setting up divergence. Had a pretty clean trend line right there, bearish rising wedge, negative divergence, and so far that was the high. So the dollar has peaked and has been falling, and so that was bullish for gold when the dollar was falling. However, the dollar's been rallying now for the last couple weeks or so here in this channel, really a price channel if you look at it like that, and right up along this trend line. So let me strip away everything else, and the most salient things to watch on this chart at this point in time are this uptrend line, which is now broken. It's not very impulsive. I'd like to see a little more impulsive selling and follow through, but it is a breakdown. And I can also add, and I will right now, we had a little bit of divergence there, at least on the PPO right there, and I'll draw that little price channel. So here it is. I'm going to put a line here that should do the trick, I think, if the dollar index can break below it. We've got some minor support there, about 96. And break of that should take us down there, 95.5, 536. And ultimately, my minimum target right now in the dollar index is down here, 94.539 right there. That's pretty good support. So if we get that, I think we can finally get a spike up in gold and silver. And so I'm still hanging in there with those guys. So they're not moving, but they're not really going down either, despite this move up in the dollar. It's just kind of put the brakes on it. Let me get to those for you real quick. There's GC, gold futures. You can also trade, of course, GLD, or the miners will usually go along with it. Silver tends to follow. So here's the big levels right there. It's about 1840 right there. We had that little brief false breakout, broke down below the bearish rising wedge, correction mode, but we've been holding up on this uptrend line right now. We do have three distinct reactions. One, two, and recently we've been hitting that trend line and holding above it, so that's three. And the fact that we have bullish or positive divergence down here on the indicators helps to support the case that we'll probably rally. And there's some support below if we get a little whipsaw down through there. And so if we do, targets 1819 and then 1840, and I think the next break of that level will be the one that sticks, would be my guess. So we'll see. SI silver, again, hanging in there, despite that recent slight uptrend in the dollar, that little price channel I showed you. Silver's been holding this support right here, about 22.31, with positive divergence. So, the technicals are in place, the bullish technicals for rally. You just need that catalyst, and I believe that catalyst will be a solid breakdown or follow through on today's breakdown in the dollar. And look, it's not moving, but I'll say this right now. It's an objective long entry, especially with the dollar cracking below that support level today. You can buy silver right here, right now, right off support, and with a stop somewhat below. Somewhat, it all depends on what you're looking at. We could be looking at the next major leg up in silver, or you can continue to get in hit and run mode. It's been really a hit and run trade now for months, kind of moving around. Anyways, just wanted to point out it still looks constructive. And the other precious metals I mentioned recently were palladium. That one was a long, and it's already hit my second target, 1874.80. Actually hit it there, hit it again recently, and it's got a small divergent high right now in place. So I'm actually, at this point in time, more partial gold and silver than I am. We gotta, this one was profitable for the last week or so. It was mentioned as a breakout after that downtrend line, and it took back this 1776.50-ish support. That was pretty good support right there. We had a little whipsaw false breakdown there, and we recovered it. So there's nothing wrong with sticking with this one. Those divergences may not play out. If they do, maybe a little pullback to 1776, another thrust up here, and that'd still be at this point in time, my max target or max swing target, about 2143. And the other metal was platinum, and laid out one of two scenarios. We had a bullish falling wedge. We broke out and back tested recently. It's been moving up, and I said maybe that's it, and it'll run up here to that target zone. If not, I could put it about equal odds on seeing another drop down to test that recent low down here at about 896.50. And at this point in time, I was also talking about a potential back test of the trend line, but that trend line's too far, so I wouldn't give it much room below 896.50, if at all, or keep a tight stop if you're in it now and trying to swing up here. Again, if the dollar breaks out and gold and silver run, platinum could run, but these guys have really traded more so like industrial metals and precious metals recently, and not always following what gold and or silver are doing. But either way, just wanted to give you updates on those. And certainly an update on crude oil. This I still believe was a significant top. a major top in crude, and that was based on the long-term charts, daily and weekly charts, resistance, divergences, everything else. And we've certainly had the biggest drop in crude in many, many months. What was it, 20, almost 30% or so. And again, it was just a beautiful uptrend line, really a double or almost triple top high there, breakdown back test, and then we broke that level, 77.83. Anyways, we went down here, and last week I mentioned we had positive divergence, gave you a couple bounce targets. First one was hit quickly. That was, we were down here when I pointed it out. We rallied up for about, what was it, I forget now, 7-8% gain, 9%. Hit that first target, which was a 23.6% Fibonacci retracement level at about $69. Went down, and in going down after that reaction off the tag of that initial target, we just extended the divergence, and we had then an even bigger rally. Crude's rallied off that divergent low about, gosh, 16% or so. Yep, almost 17%. But again, the drop, it's only actually it's rallied right back to the 38% fib. So as big as that drop is, it's just a fraction of what we've already dropped. And we're at, we've now, and including yesterday, hit my max bounce target zone, which was $71.20 to $72. And crude's at $71.70 right now. So one of two things. You may want to book full profits if you took it. We could go here. When I said max bounce target zone, that's what I laid out back then. I could still see the possibility of another thrust to that trend line. And then if so, you also have the 50% fib and price resistance right here, about 75.60. So let me just say, although that was, and I'll just maintain that target, and I'm out of crude now. Short again, I can see another thrust up here, and that's where I don't want to see crude exceed 75.50. So if it gets up there, I'll probably add to my position, and then be more concerned about stopping out, scaling out anything above there. And just like the market has that level that if it punches above the Qs, I think this is really where crude would run, and then in hindsight we'll have to say, well, I called a nice correction, but not the top, and the correction's over, and then we'll probably head up and run at or take out the old highs. But again, that's a possibility, as anything's possible, but I think the probabilities favor this, either reversal here or up to there, and that's a small area, so it's an easy scale out along or into short, or both zone right there from where we're at now up to about 74.60. And again, that when looking at this chart, the 60-minute chart in a vacuum, I would say no. Every divergent low we get in crude for many months now has been the catalyst for the rally up to the next new highs. Why is it different this time? Again, it's all in the long-term charts, which I've covered in other videos. And to keep this one relatively short, you can reference those. What I've pointed out on the daily chart and weekly chart of crude. Next up, sugar. Sugar is a new trade idea, and this one's been kind of sweet, obviously pun intended for trades. There's two boards I'm going to show you. Let me start with the 60-minute board. I'm sorry, 120 minutes, 2-hour candles. Let me fix that. Okay, let me point out a few things on there. First and foremost probably is this uptrend line right here. Nice, well-defined. Look at all these distinct reactions. Quite a few there. Another one there. We had reactions around it. We broke, back-tested, and then rejected. So we're back-testing. So number one, this, by the way, is a short trade idea. We're back-testing. So you either short a breakdown of a trend line right here or a back-test. So there it is. Support, once broken, becomes resistance. So you have that. You also we're coming off a divergent high, just like you had a divergent high here. You had a divergent high there, and although those were relatively minor corrections, this divergent high led to a breakdown of a primary trend line, so we could get more downside. Okay, that's another potential reason to short. Then look down here. Look at these trend lines, or I'm sorry, these I've covered this in the past because I've had sugar highlighted most recently. It was a long trade idea. I need to add one more line here, but look how just incredible this indicator's work. This is the PPO. If you look for these low-level bullish PPO crossovers, when the PPO is down this low and it crosses over bullish, that's where I have all these vertical lines. What do you do at that point? Right there, you go long. Look at that, boom, 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 boom. Okay, well that's over, right? So at this point in time, we're looking for the next crossover, and it's not as clear here. You do see some, and you could do the same thing. I'll circle them, the high-level bearish PPO crossovers. But let's drop down now to the hourly chart, 60-minute chart, one of my favorite trading time frames. And you can see down below what I've done here, all the bearish PPO crossovers that occurred above the zero line. So you have zero line on the PPO indicators right here. And they're all marked, all these lines. They show you when you had bearish crossovers above the zero line. And so we're just going to quickly look what happened if you just went short or sold, got out of your longs, either one. Boom, 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 boom. It would be right there. Boom, boom, boom. Another one right here. Boom. And so now all we need is that bearish peak. Look, it almost did, but it kissed, but the lines bounced. We never got the crossover. The PPO was coming down, but it bounced. But we're at high levels. Rarely does it hang it. See, there was a near bounce right there before they crossed. Sometimes you get that little jog down just before the crossover occurs. So bottom line, I think it's going to come, and it probably coincides. So you could either short now the back test or wait for that bearish PPO crossover in the 60-minute time frame, and that should be good for the next leg down. I don't have targets for you at this time, but going back to that 60 or 120-minute chart, being that we had a divergent high and then a breakdown, a back test, I think we can go down and probably take out that previous low. So more of a position trade now. Short it, stops wherever you want them, somewhat above. You can see resistance way up there, but I'd keep it relatively tight. In maybe a half position and add if you get the bearish crossover on the 60-minute chart. You can also see what happens. We're pretty overbought right now. Last time we were this overbought was right here. Before that was right here. We pulled back. Go across. Well, got to go to right here. That's what happened. You got to go to right here. We had a little pullback then, right there. You can see. So there's a lot of evidence to say this rally is probably about to end in sugar. And plus, sugar it's a trading. It's a nice tradable vehicle. It has these little rips followed by dips. Rips, dips, rips, dips, rips, dips. So here's a rip. That's not to say it can't go anymore, but that's about all they've gone recently, give or take. So, all right, enough spent on that. Take it, don't take it. It's up to you. If you don't trade futures, cane or sugar, SGG. This is a daily chart. Here's a trend line right there. Primary uptrend line. Lots of reactions on sugar. I've been bullish on commodities, including this one, for quite a while. But in recent months, they've had a heck of a run, and a lot of them have been correcting, moving sideways, and they've become better trading vehicles than buy and hold vehicles in recent months. So there it is. We're back testing the trend line. Maybe a move all the way back down to about 52.09 based on where the charts are. Cane, let's see, I haven't even looked at cane in a while. I usually use sugar as the one, or SGG, but cane, same thing. Cane actually, well, no, not same thing, because of the way I have a trend line on cane, they're two different companies, ETNs, but cane just put in this big divergent high right here. However, it just bounced off both price and trend line support. So this would be a longer term bearish case to short sugar, or at least this cane ETN, and they're going to move roughly together if and when these levels break. Okay, Treasury Bonds were mentioned as a short trade about a week or so ago, and we've been really just running into resistance. It'll show better on TLT. We have a lot of resistance up here. We had a breakout above a potential downtrend line, but that breakout's failed, so that gives this trade a check mark, and I think we're still going lower. We also more recently put in this divergent high, negative divergence, and then you had, as pointed out recently, nice clean trend line right there, uptrend line, which was broken. And so you broke down, you hit the trend line. There was a lot that's happened recently. You hit the trend line here, you had a reaction back to the first resistance, 162.295, rejected there, now we're falling down. and probably going to come in lower. Let me see if I can zoom down to a, let me see if I can give you a target here on this 2 hour. Probably this trend line down here. I think we can swing down to the 30-minute chart. Let me make sure, or 60-minute chart. Let me make sure there's nothing there. Yeah, same thing. It's just zoomed in, showing you that same breakdown recently. Had a divergent low there. You know, simple stuff. Negative divergence, correction. Positive divergence, rally. Negative divergence, correction. And so forth and so on. TLT is the long bond ETF. And you had this recent trading range boxed in here in orange right there. You broke it, but as I said, the breakout would probably prove to fail. It was just a marginal pop, and then we're back in there, so that's a failed breakout, and you put in negative divergence at that new marginal new high. And so again, targets for you if you're using TLT, you have an uptrend line right here, which is that same one I probably just showed you on the 30 or 60 or 120 minute chart. Plus you have pretty nice support right there, about 145, and they come in together, so there's your target. And that's, hey, it's not much in percentage terms. I've talked about this before. You can use TBT, which is a 2-time inverse short. It's the same thing as this, but leveraged and 2 times short or inverse. So you'd get, whereas in TLT, if you short it, well, you'd already be short. It was pointed out back here. So somewhere around those highs. And so that would give about a 4.5% gain if that target's hit, which is about 9% in TBT, but many thousands of dollars in just a single contract of ZB because the bond futures are leveraged. All right, and the other one I mentioned recently as well was shorting corporate bonds. No, that's not it. LQD, the not junk bonds, but the investment grade bonds. LQD. And basis for that short trade was a rally into this resistance level, and so far so good. And I also laid out a futures contract, which is IBXXIBIG, and that tracks this same iShares iBox or the iBox whatever that is, investment grade corporate bond index. I'm sorry, that was a tongue twister for me. Where does it go? Well, probably down here. You have a support zone 132.31 down to 131.72, but wouldn't, not much more than that, because we just put in a divergent low in this one. So after the correction, we could rally up, and then a price target would be a longer term target. If you're looking at it, would be this downtrend line right here. Okay, and that's it. That's not it's everything I wanted to cover in this video, but I'll continue to post updates on anything else that stands out. But as of now, like I said, looking to see how we close today. Ideally, red day today, and that's what I'm banking on and betting on. And then especially, I'd like to see some more downside into tomorrow and Friday to close, to give us some red candles for the week. Nothing would be better for the bearish case to get another red candlestick close, especially after this rally. Okay, this has been Randy Finney with Right Side of the Chart. Have a great day.